Morning guys, sorry for the late bulletin. I just wanted to capture the London session. We were doing it before the London Open. Of course things obviously fluctuate and stuff, so what I wanted to do is capture, after London's Open, and we can get like a truer picture about positions for this particular session. So what's happening, they're slowing down slightly, but the technicals are really pumping. We've got a perfect score on the technicals, 100 out of 100, and it's basically measuring all of these instruments here. So VIX got dumped, indices are rallying, dollar was falling. I have to check it. I think it might be gaining a little bit because of the PMIs from Europe, and we've got the ones coming out from the UK in a bit, so we might see a reverse on the dollar, but do note that we're very strong technically. The herd are very short, but they're just slowing down ever so slightly, so I can show you that slowdown. Also note that the yield curve is really bonkers still. Okay, comes down to Friday. So the slowdown happened on DAX, so that's of note, and they added a little bit short on US 30, and they slowing down slightly on S&P. See, we're getting closer to zero ever so slightly. So there's 4 people selling S&P last week. There's now 3 people selling S&P. Next Friday 2, then 1, then we could go to sell. Okay, so it's going to be like 2 or 3 weeks of bear extinction potentially, and then we'll see the top, and then things can fall, and that'll be normal and healthy because things have to move in cycles like this, right? We have to go like this. We can't just go like that, which is what the indices are doing. There's no retracement. They're just up and up and up and up and up and up. And what we want to see is nice healthy retracement. So we can buy the dip, sell the rip. Well, for indices, I wouldn't ever recommend selling, but it can offer you the opportunity if you want to take it. You always want to be looking to buy indices, all right? And if it does this, then that's great, okay? So you're going to maximize lots of profits and stuff. And it's all very much one-way street right now. So we've got risky currencies at the top, and we've probably got the safe havens down the bottom. Yeah. EJ is interesting, it's down there. Oh, in fact, the yen is strengthening quite a bit, so that's of note. What have they done? They've gone long dollars, Kiwi, Swiss, then they sold Aussie. So Aussie could probably do a bit better today, so that's interesting. It's not really doing much. It should be pumping because they've sold it. So we have to keep an eye on that. Robot. Yeah, so we had a £5 loss, and what happened? See these EU trades? They should have gone up, and we should have got to TP. And what it does, that telling us there, this has not respected the sentiment at all, and the herd got paid. Alright, so I'll show you the bubbles. Okay, so I'll show you the daily bubbles. They'd gone long dollar and they sold the euro, so we should be going up on that and down on that. So the euro USD should have done okay, but obviously we got to our stop loss, and we had the PMIs out, so they used that excuse to raid stops, and so we had a loss, but we shouldn't have sentimentally. So I think we might want to veer away from sentiment, but go down a technical route, get some nice profits potentially on a technical basis, and then we can add some sentiment on top. But we can't, I don't know if we can rely on the sentiment being like 100%, because it's really going to take stops. Okay, so we are really falling. We were 110 last night before I went to bed, and now we're 109.50. We've fallen 50 pips on the euro. So yeah, got to be really careful. So I think perhaps technical route, good risk management, and then we can add sentiment on top, and that'll give it a nice like a random flavour to the robot. At the moment, it's a little bit like a Monte Carlo, where it's a bit like, you bet on black or red, so because we really should have done okay on those trades, but for some reason, well, the PMIs are coming weak, and that's the reason for the euro weakness. And of course the yield to be pumping as well. The US yields, they will relish a weakness in the euro, so there's a fundamental basis for that as well. But sentimentally, this should have done okay, and we should have got to TP. So next week I'm not going to do any manual trades, I don't think. I'm taking it easy from a manual trading perspective, but I'm going to be spending all my time looking at the robot, and we can have a look at different setups. But I think you might want to go down a technical route and then we can add sentiment on top of that, I think. Also note that we had a stochastic oscillator cross as well, so from a technical view, you know, we did make a sell on the stochastic here, and we probably could have raided that stop loss cluster as well, couldn't we? So a little bit of a ramble there, but I think it's a good thing that I'll be doing next week when we're looking at the robot, and I can really devote my time on the robot as well. So this week it's been like manual trading. It's very hard to do both. So gold is looking for fundamentals, I think, because we're so sideways, and it's going to be looking at the US yields. Do note we've got some heavy duty supply above 2073, and we might come up and just raise some stops, so you've got to be careful there. Now indices were looking quite strong when I was doing the Discord analysis. Yeah, see, this would be fine. The reason why that's okay and why we're going up is because they'd sold it. See the arrow here, we had the crossover, they'd sold it, we create a demand, so that's fine. Okay, so we're going to probably have to come up, raid more stops. They can't be selling it. If they sell it, they'll get punished. Okay, and hopefully this is quite educational for you, and you understand how the markets work. Okay, people are like, why is it going higher and higher? I don't understand. It's probably because of this. Okay, they sold it, so in fact we can make a box. But see, this is the arrow from that box, and we've got an arrow for this box, so we can put a box on a box. Wow, so it's like doubly strong. So be careful, only look to buy, don't look to sell. Okay, and that's really strong, isn't it? Yes, fairly DAX. Now the thing is, we had the crossover alert, so that told us that they're selling it, and of course we're going to have to pump. And it's crazy. I can't blame them for wanting to sell it because they want to get out of break even. See, there's the signal, right, to say with a cross under, so that the SSI line has crossed below the moving average, and if it crosses below, it tells us that they're selling. If they sell it, we'll pump. So it's a really good setup here, very, very powerful. So let's map that, which is this tiny candle here, and that's fine, and that would be normal. Although it is incredibly boring, at least it makes sense why it's going to pump, because they'd sold it, right? So all-time highs, you kind of imagine that they would have wanted to sell it with a stop at the round number, so you might want to be doing that again. Might want to just revisit that high to hit those stops. And I was saying to the Discord guys, 17,000 should do it, but 17,100 would be what I would get out, and because I wouldn't want to put it at the round number. So that's a possible situation where that's what they're doing as well. They're putting their stops at the round number, and then I think, well, maybe just slightly above, because I don't want to make it really, really obvious. So it might get to the all-time high, like a impulse, big pump on volatility, take those stops, and then we'll have to see how we go. So incredibly bullish, don't fight it, be careful. It looks a little bit toppy here, admittedly, but they have sold it. Okay, and that's just today's video. So robots undergoing a lot of pressure from a stop hunt view, so we have to look at that over next weekend. I don't know how we're gonna have a robot with good risk management when the market's just going to take stops, and those stops can be really wide, up to 100 pips. So unless we moved our stop loss 100 pips, you know, but we don't want to do that because there's a terrible risk management. So we were having large stop losses, but then of course when they got hit, it would be pretty catastrophic. So we'll have to have a think next week for the robot. Indices are going to continue higher, and don't forget that we've got the risky currencies at the top, and the risk calculation, we're really, really strong. really, really strong on the technicals. So be careful, have a great weekend, and I'll speak to you guys on Sunday for the cut report. I wholeheartedly recommend fxsi.com and their indicators for MetaTrader 4 and 5. It's a 7-day free trial, so do have a look. There's no credit card required. You might be lacking in some sentiment awareness, analysis, and it does complement technical and fundamentals very well. Especially if you're very technical, you could be missing out on some sentiment, or if you're particularly fundamental, you could be missing out on some sentiment. This is like a sweet zone. It complements both, and it gives you a very strong bias about direction as well. So technicals are great for direction, fundamentals are great for direction, but the sentiment sits in between. Okay, and so perhaps if you're missing out on some sentiment awareness, these are the best indicators in existence in the world for that. And then you can have a look at this. You've got a 7-day free trial, and you've got your order book, and you've got your indicators, including the ratios, which are amazing. Just look at my videos on my YouTube channel and you can see how powerful the ratios are. And you can have a look. Just take your time. You've got 7 days to trial them, and if you don't like them, then that's fair enough. You don't have to renew, but we do have a code if you want to, and it's just the QDB code, and it gives you a 10% discount, and that's it. So have a look, see what you think, and like I said, it's a 7-day trial, so you don't have to renew, but I think you'll probably find you will renew afterwards, because the order book and the ratios and the stop loss clusters as well are amazing. The stop loss clusters are great because you know where to target. Okay, so that's where you take profit, where people get stopped out. Okay, and that's it. So just a quick plug for the fxside.com, and enjoy your day.